So RBC recently said that Canadian banks would be in tough over the next year and a half or 2 years, as we're about to see as many as 3.5 million Canadians have their mortgages coming up for renewal. And obviously, if you're in variable rate mortgage, you've already seen your rates increase significantly. I know many investors that have already told me they've received 2-3 letters from the banks telling them that they need to increase payments on their mortgage just to keep up with the interest, let alone, forget about paying anything against the principal. And we know that by 2026, pretty much all Canadians will have their mortgage come up for renewal that have not had their mortgages up for renewal as yet. And we know that, there's still a bunch of Canadians that are still reaping the rewards, or at least enjoying, a mortgage rate of 2-3%. And I think that has a lot to do with why we're still seeing the spending happening in our economy. Recently, we have received economic data saying that, GDP in our country isn't growing much. In fact, it's kind of flatlining. And we'll get into that in our next segment. But overall, Royal Bank is concerned. Banks in general are concerned that we could start to see some defaults on some of these mortgages, or perhaps they'll have to negotiate with some of these mortgage holders. And you can see here, I have a chart on the prime rate. And prime rate is basically what the banks charge all of us. The Bank of Canada overnight rate is what the Bank of Canada charges the banks. So as the Bank of Canada raises rates, the banks raise the prime rate for us. And you can see here, and this is kind of interesting. And one thought I would leave you with is you can see how much, I guess, the bank rate and the prime rate have come down since the early 80s, which is when we saw double-digit interest rates. And you can see it kind of flatlining between 2010 and 2020, both prime rate and the bank rate, and recently spike higher. And so the last time we saw rates at these levels, you're probably looking at somewhere around 2006, 2007. But at that time, the stock market was still able to move higher. So if the stock market was able to move higher back the last time rates were this high, why isn't the stock market moving higher today? Why are higher rates such an obstacle for the stock market? A question that I've been asking and many have been asking. The only thing I could come up with, to be honest, is the speed of the rate hikes, how fast interest rates have moved higher. And really, it's caught people off guard. It's caught a lot of debt holders, whether it's a mortgage, line of credit. It's caught businesses off guard, how fast the Bank of Canada and Federal Reserve have moved rates. And I think that speed of interest rates rising has really been the big negative. I think once we get some stability there, the fact that interest rates today, prime rate just above 7%, I think that we can handle that. I think the stock market can continue to move higher, even with these rates, but we just need to hear that rates are staying at these levels and will not be moving higher anytime soon.